Despite yesterday's modest gains, Australian dollar futures opened the day and lost their footing right from the start. Really news flow and data. On the data side, China's GDP year over year declined, albeit quarter over quarter hit consensus estimates, but that really dented the mood. Australian jobs, the headline printed above consensus. However, beneath the surface, the increase in hourly earnings kind of reflects the lockdowns in New South Wales. And speaking of lockdowns, the state of Victoria just instituted a 5-day lockdown due to COVID, and that news really dented the mood and sent Australian dollar lower. So we go into the U.S. session, a lot more dollar positive as opposed to being Australia negative. But on the positive side, we had ECB spillover. We had initial claims data hit a 16-month low. Empire manufacturing beat by a record amount, and record is going back to 2001. And also had some hawkish statements from St. Louis President Bullard, who said, we have made substantial further progress with regards to employment and inflation, and it's time to end the emergency measures. On the only negative side would be manufacturing production today declined, and the Philly Fed business survey outlook hit a 7-month low. But overall, very dollar positive, and really kept Australian dollar pushed lower throughout the day. Looking at options volatility, I'm looking at the CME Group C-Vol and September options, looking at September as judged on a 1-month and a 3-month basis, trading about mid-range. At the money volatility, unchanged on the day. Implied skew, though, is higher as the down variance or the put wing is lower, whereas the call wing is unchanged. That's pushing skew higher. The biggest volume, or observable volume, would be in the 74.5, 75 call area, and also cluster between the 73 and the 72 puts.